Hey, it's John, and I got some thoughts I like to share in a little more of an extended discussion with you today. There's this idea in crypto of the three tiers, the three apexes of a protocol. There's the scalability, the security, and the decentralization, and there are trade-offs you make to go closer to one or another. And I sort of see a similar trend in content of length, quality, and comprehensiveness. I'm going to take a few moments to think about things like that during this video, but I'm not going to edit it because I really want to make this as comprehensive as I can because this is a pretty material choice. By the end of this video, I want to lay out for you a roadmap and a foundation for what. So I've been working, and I've been at the juxtaposition of this difficulty, this challenge, for a number of years since I started formalizing. For those of you who know, ever since I learned of Ethereum, within a couple months, I had formed. I think it was within a month, really. That was in 2017, so that was 7 years ago now. I formalized in my head and on paper and through the principles of Thinking Grow Rich, which I'm really happy to have public on here now. My goal of creating real savings and retirements for masses of people through an online broker that combines traditional equity, bond, and cryptocurrency, currency and crypto markets in a decentralized system that rewards independent money managers, allows everyone to easily invest, opens active trading to the world, and helps replace existing banking systems. And there's a lot in that goal, and you know, working every day to flesh that out. I've been working every day for 7 years to flesh that out. Um, but I want to kind of keep it on this video, and it's about sort of the next steps for DRS GME, WhyDRS, this movement we have together um, for getting information out there. Bob mentioned in this thread that this is sort of a reply to that and before I ramble on too long, I'll just see it's tough because I want to give you something that I can promise by the end of this video, but this isn't a planned video, it's not a scripted video. It is really just raw thoughts based off of years of grappling with this challenge. And so, again, this idea of, is it concise? Is it entertaining? Or is it comprehensive? I'm really leaning towards comprehensive here because I want to share sort of the thoughts I have on this because that's really all they are, just my personal thoughts. Block transfer right now is, you're looking at it, right? I mean, it's really grassroots bootstrapped, as all my companies. Well, I mean, based off the experience I have, that I'm really trying to document as best I can to help other, entrepreneurs and innovators. But I wanna keep it focused here, so that's what I'll work on. Bob mentioned this idea that what we're exposing through the whole DRS movement and this idea of taking the power away from Wall Street and really democratizing markets and building them from the ground up for the benefit of investors, not investment banks and such, is that it's a carcass being consumed by the crabs and microorganisms. This idea that there's not a magic bullet that's going to expose this corruption that is built up over decades in Wall Street and originated over, hundreds of years. This is a very big challenge. And the challenge I see is this idea of how democratized is capital in a society and world, for the most part, built on capitalism. Um, I guess we could say probably after the Cold War, entirely built on capitalism, and there are all these perspectives that came out in the 20th century of how involved or how involved government should be, how because government really is just a means, a representation of people, right? And it's an elected government. It's not like it's something we can't change. It's the system that we built, and it's been designed to have our voices in it. So um, I think there's a lot that we really do have the power to define the system as we want to build it. And so back to what Bob was saying, is it's sort of 1,000 little slices of research and development that's exposing all the corruption and the problems that we have in the current system of centralized finance. And so one way or another, and so coming from that world of trading at the retail level, opening an individual account and just trying to make trades inspired by the potential of markets, originally it was stock markets, but now it's grown to be markets for currency, markets for capital in equities and bonds, and then futures. I don't really not future commodities. I don't deal as much with, because the barrier to entry is so high. It's like you need 25, 50 grand to open an account to even start trading it, because it's all based off credit leverage instead of just a reasonable debit account based system where you can just have your money and trade with your money instead of needing all these approvals of all these middlemen and third parties. Yeah. But before we get too far into it, I have one message for you through this is going to be, what's the next step for organizing the WhyDRS? I'm going to go with WhyDRS as the overall name here. I know there's different groups. There's like the Irvin guys that are focusing on the government advocacy. There's specifically just the GME guys who are focusing on the fundamentals of the company. But I think really what's at stake here is the future of our, I'd say stock market, but really it's our capital market system and I think that's a perspective that I've tried to lay out in our comment letter in S7-1523 with the SEC, is this idea that the world is becoming increasingly connected, and that first happened with, I guess, email is the start of the internet, but really the World Wide Web. And the exact same thing is happening today with currencies. The question, will it end with dollars? Will it end with Bitcoin? Will it end with something else? Is still up in the air, and there are a lot of viewpoints on it on all sides there. But so you've got, and same thing with information, right? There more and more, like something like this would not be possible even 20 years ago. To just freely speak, that wasn't possible. You had to have a platform. You had to have politics that you aligned with, that could get you in front of the right people to make the connections in life and business, to go and then get in front of an audience through radio, or however people connected. And it was all very fragmented. I'm sorry, not very fragmented. It was all very centralized. So like if you look at the most popular artists, they're all from the 60s, the 70s, the 80s, when the means of distribution was extremely tightly controlled. You had to go through one record company to get your music out there, and so there were these very dominating viewpoints that became mainstream, because there were, everyone's tuned into, there's only at the start so many, 3 TV channels. So whatever's on those TV channels is going to be what you take in, and what you think, coming from, because what you think is sort of a basis. It's based on kind of the background of the information you take in. And it's the exact same thing with, there's so many incredible books that have come out in the past 20 years, and you're building on the backgrounds of someone's entire life, right? And everything they've learned. And that's only possible because I mean, going back to the printing press, like, it was all very centralized. Knowledge was centralized, power was centralized. You look at the transition of the world from dictatorships and monarchies, kings and queens, a world where money didn't even exist and you were a serf living on a farm and you worked your whole life to serve the master of the land. um, in those historic days, right, before money, I think money is democratizing. It's a democratizing tool because it lets you pick what you want to specialize in, and through the principle of compensation from Raldo Anderson, um, this idea that it's a representation of value, and that if you put the value out, then the money becomes a way to realize that. And that wasn't possible before the invention of money. There was no way to do that unless you were already at the top. Sort of thinking about the caste system, right? It was all based off of this hierarchy of how society's organized, and the only people that had the by nature of being the first ones to take that power, they were the kings that became the rulers of the land and enforced that rule through violence. Guns basically is what the equivalent would be today. That's not the world we live in anymore. We live in a world where you can do. I mean, people. You've got streamers selling their bath water to Twitch subscribers for $50 for a little cup of water. I mean, that wouldn't be possible before. That would be laughed out unless it was someone at the upper echelons of society. There would be no social mobility, and no. It's interesting. I don't know how in the last half year this has happened, but all this work I've done building out a system for decentralized securities trading and settlement has become this political a thesis, for one reason or another, because the infrastructure that I've come to realize I'm trying to replace is not just the system for trading stocks. It really is a question of how we deal with the allocation of capital on a societal level, because it used to be, if you wanted capital, look at Christopher Columbus, you had to appeal to kings and queens. And the advent of the joint stock company through the Dutch East Indies Corp really was a pivotal shift, I think, in social organization, because it let anyone with an idea, and sure, maybe they would have started off powerful, but it let them use a democratic basis of capital. So not going to the powerful and authoritative, all-knowing king and queen, but instead going to the people and raising money from them in their own self-interest, such that, you invest and you'll get a return on your investment. And that was something that used to only be available if you were at the top of the, you were the 1% who ruled the country. And now it's something that anybody can do, almost anybody. I mean, ICOs are really the crux of this example. They're maybe the end game, you could say, of the democratization of capital. This idea that you can have I guess most, Ethereum's kind of in 2017, right? You could open an Ethereum wallet with zero permissions from anybody, and one way or another, you get the Ether. You look at the original DAO, right? That was funded through Ethereum, and you'd send the Ethereum using the permission of nobody. You send the Ethereum to a smart contract, which is this unbelievable paradigm shift of how we think about laws, how we think about organizations, and how we think about the companies even. The principle I would extract from that is, okay, well, now anybody, and literally with the DAO, anybody, and with all these ICOs, anybody anywhere can invest. And that's huge. I mean, that you really are going from, there are 5 kings and queens that can fund Christopher Columbus, to the creation of a nation whose ideologies have changed the planet, and now sort of this end game where anybody with an idea can put out a 5-page white paper and raise millions of dollars, which we equate to being value in society and the means of producing what that idea is about. I mean, at the end of the day, every successful company, every company started out as an idea in one person's head. Um, and I think we really have the potential to change the pace at which society innovates through democratizing access to capital. Um, and that's kind of the question that's in mind here, with the next steps for WhyDRS is how to, this is a very it's a very important stage where we need to figure out how to deal with fundraising, how to deal with group organization, and how to manage ongoing operations. And in the legacy system, this is all sort of very clearly what you would start a company for, right? You build out the, like the first companies, what were they? They were charters from kings and queens, right? Granting you, like the Dutch East Indies Company, it was a charter from the king and queen granting a monopoly to go and do a certain trade, and you had to have permission. You had to have centralized permission to run a business, to be an entrepreneur. You couldn't just go to the Secretary of State and file 3 pieces of paperwork to start a company. And that's changed in the 20th century. And it's democratized. There are more and more small businesses. There are more and more companies formed every single day, every single year. The numbers just go up and up and up. In the US, it's a geometric curve of innovation, of new entrants into the market, and of new groups of people organizing to solve these challenges, these ideas that they have. And the bar has never been lower. I incorporated my first company in a high school with no business background, knowledge, education, experience. All you need is $200, and the government recognizes your entity, right? And I think we're really at the precipice here of if you look at the history of it, the bar goes lower and lower and lower until eventually it becomes non-existent with some of these DAOs that are just unincorporated groups of people focusing on a central role. Shapeshift comes to mind as an example. They transitioned from a for-profit venture-backed company into and sort of test a time on this. We'll see how it works out. It hasn't really been tested in courts extensively. Is how do we organize people? And it gets to the very important topic of investor protections, which I sort of outlined in that last post I did on Lemmy with insider trading, because on the traditional company side, there's always that information asymmetry where, not everyone's on an equal playing field. There need to be protections in place for investors for things like that, but also for things like fraud. I mean, you look at all the ICOs that were they were just scams. To think that anyone should, it's tough the case law here is challenging because the big prominent scams like the BitConnects were not sort of structured in the traditional sense of a inequity offering where you're selling a piece of the pie to investors. It was more of a just kind of Ponzi sort of thing. And even the crypto scams that said they were doing that, it was really just kind of a straight centralized Ponzi scheme. I don't think there are a lot of good examples of, I mean, I guess there's Ponzi coin in it, and there are the smart contracts that you have where it's very blatantly obvious, like if you send money to this Ethereum at this contract address, and then somebody else sends money, then you'll get your money back. And like that's bizarre. I think that's such an interesting experiment on social there's this idea that if you're in a room and you say, how much will you pay me for this $100 bill, but you have to pay the price of whoever comes in second. So you'll have two people ultimately bid it up. Someone gets to 99, someone bids up 100, and then someone bids 101, and now they have to pay the price of the person before them. So then the person before them, and I'm messing this up, but the person before them. Some people say to be a convincing storyteller, you have to really practice beforehand and get it down. And I really want to spend more time doing that, and that's why I'm trying to figure out a way to sort of produce revenue from this content so that I can put more time and effort into scripts and into the content quality and into the publishing and things like that. Because as I've been working on sort of distributed publishing and open publishing for open free information for years now. But what happens is the incentives mess up, and now you have, one person there's this example where people are paying $400 for a $100 bill because they're stuck with the person before them. It sees two people bidding it up to see who's going to lose, and it's a question of how much you're willing to lose. And that's exactly what happens with some of these Ponzi contracts. And then the question is, well, if we have a smart contract that's built on the principles that you're the loser only if you're the last person in, is that a company? Like, how do you and it's deployed by a pseudonymous user on a blockchain that no one can shut down. How do we as a society deal with the very material questions of, well, who can invest in this? What are the policies around them? And how do you what is your course of action if there is fraud and lies? And that's tough. It's a hard question. I really wish I did this as a stream so I could get some more perspectives on it, but I didn't. Definitely something to keep in mind going forward. And so I know that was 22 minutes of getting to what is now the next point, which is that really from day one, I think there's a challenge here with the movement that we're promoting, which is removing the New York Stock Exchanges from the world, removing the DTCCs from the world. And brokers, I don't know. I'm a little up in the air on brokers still. I think I'm trying to understand. I think there are some values added by brokers on like the user interface and the user experience point of view and the investment advice point of view, on the basis that we don't yet have decentralized asset management, which is my long-term goal with building out this infrastructure, is that independent money managers all right. Well, I said comprehensive, so I'll be comprehensive. I think there's a lot of alpha in independent money managers that's being hidden away. And the reason why is because it's very challenging, having gone through it firsthand, to set up an investment fund. And the problem I see is that the people that know how to trade the best are the ones that go and work at hedge funds, and they make 20% of their on the low end, right? Some prop firms, it's a 50-50 split. That's fairly common. But the ones that do it at scale, they usually run a hedge fund, and on the low end, some of them are taking like 56%, which is of gains, because there's no competition in it, right? But at scale. But sort of, I believe very wholeheartedly in the Pareto principle, being 80-20 rule. And that's how I ran when I did the Friends and Family Fund. It was 20%, no management fee. And the people that really know how to trade, they go and start, they run funds, and they get 20% of all their profits on the low end. Most of the time they're charging management fees and all this other stuff on top of that, and a lot of times they're charging much more than 20%. Maybe they have a waterfall set up that gets them paid up to 60% of gains past a certain point. Once you're up over 20% for the year, for some investment managers, that means all the profit accrues to the fund. And so there's a very distinct lack of competition I see in the high level investment fund scheme. And the reason why is because it's so damn complicated to set up an investment fund. There are so many rules and regulations set up by the incumbents to prevent new entrants and really stranglehold an oligopoly on the money management scheme to these big brokers. And of course, the people that don't know how to trade go to work at these big brokers to be the financial advisors that get paid 2% or whatever the fee is, 1% a year to put your money in an index fund, because they don't know how to make those really outperforming stellar trades. And because if they did, they wouldn't be working for a couple pennies at a broker doing financial advising, when they could be just trading and making multiples of multiples on top of that based off of excessive returns, because capital flows to where it can give the highest return. And it's so abundantly clear, I believe, that these individuals, they need because it's so hard to organize these investment funds, that they go and they work at these jobs doing financial advice if they don't know what they're doing, and that leaves most people with an investment portfolio that doesn't really reflect the best possible investments. Now there's this argument of, oh, well, if we need to customize it for your wants and needs and things like that, and I think it's so stupid. I think for most vast majority of people, they have a time horizon, so you need to do a risk adjustment basis for the time horizon. You shouldn't have the same portfolio for a 20-year-old as a 70-year-old, sure. But aside from that, I think everyone's pretty much shared common goals to make as much as they can on a risk-adjusted basis. So if that's a same common goal for everyone, and there are groups of people being traders that can do that better than a broad market index, then very clearly our goal should be to get as much of people's investments as possible into the investments of the best traders. And I've seen firsthand how Maybe I'll get some more water. Excuse me. Excuse me. Excuse me. These day traders with their specialized knowledge and these professional money managers, their strategies, they only work up to a certain point. So if you look at kind of the biggest example is Soros and Simmons. Specifically, with the medallion fund, for example, they only accept so much money because at a certain point, investment strategies, they stop working, right? And excuse me. And there's only so much money you can put into into them, because only so big a position can be before it starts to move the market, and now you're losing alpha. You're not really getting as high of a gain as you could be. And I've seen this over and over again, and I'm happy to elaborate on that point. Um, but that's sort of the basis for my thought process, that we need to decentralize money management and lower the barrier to trading using a blockchain system. And if you lower the barrier to trading using a blockchain system, that very immediately you have public information about the growth of pseudonymous portfolios. And pseudonymity is really going to be the crux of some of the arguments that I make here for how we should proceed with this movement. Excuse me. Because don't know what came over me. Excuse me. It has a really big impact on what we live in today, which is real world legal liability. Because the way I see it, our biggest threat is that Wall Street will almost certainly sue us once we get any kind of real traction, especially if you sort of let investors self-custody their assets and remove the need for a broker in any part of the securities ownership framework. If you make it so that owning legally through a transfer agent becomes, we're the first transfer agent building an app, right? Transfer agents don't use apps because they all focus on medallion signature guarantees or their DTC profiles system. So with block transfer being the first one to use something other than the status quo on the basis of AD15 and trusting in cryptography rather than middlemen to guarantee the authenticity of a transfer, and middlemen, by middlemen I mean like physical in-person signatures, or there's so many inefficient ways that these guys do it. I would look at the startup pitch video I did, stocks on the blockchain on ADR. They're the sources there for the adoption very early on of limited of liability protection, because it's been an ongoing concern from day one. Since almost certainly, if you place the legacy system, they're going to come after you legally. They have the time, they have the money, and they have the inclination to protect what they've built, being a centralized financial industry that extracts rents arbitrarily from every single time a company wants to raise money, every single time an investor wants to trade stock, and every single time someone wants to open an investment fund. These are three pillars of a $1 trillion financial industry, the mutual funds being probably the best example of that. In an efficient world, ETFs and mutual funds would be all done through fractionalized share ownership automatically. So instead of buying a derivative, instead of buying something that's not the S&P 500, this exchange traded note, you would buy proportional shares of every component of the S&P 500. For example, in a distributed system, where now you're not trusting a middleman for those fees, and more importantly, you're not trusting a centralized exchange mechanism for the creation and destruction of blocks of an asset that's represented. I have a really big problem. I have a really big challenge ideologically with ADRs. This idea that you're representing an asset with another asset that's one-to-one backed by it, on the basis that you can't access the asset based off of your legal jurisdiction. And that's the case with ADRs. You can't trade them because they're on a different stock exchange. Like, that's so silly and dumb. I mean, I get why that made sense 100 years ago. I don't see how it makes sense in our, with the internet, modern blockchain tech. There's no reason that you need to be plugged into a New York Stock Exchange, for example, to trade these securities. So, yeah, and it's a similar thing with like the stable coins of today. You've got the traditional bank system, which is fragmented and confusing by all the different countries on one side, and then you've got trying to standardize it. USDC is the example that comes to mind, and even that is fragmented between different chains, which is useful in fostering adoption and such. But I think really, if we want to have this all work long term and be as seamless as possible, just like all the currencies are going to boil down to one currency. You look at the centralization of networks through, like there's only really, I'd say one major place that you would go to. This is going on YouTube, right? And there's this challenging question of, jeez. Look, I'm sorry. This is gonna be fairly long and comprehensive video, but I really was hoping that I could get kind of some of this information out through a series of interviews, media placements and such, so that it would be more organized and more professionally put together. And I'll keep working on that. But this is my raw, you've got, I think it's more important to be comprehensive in sharing kind of how I feel about it, so you can understand the thought process and let me know, let me know what you think, right? So, I forgot exactly what I was covering there. I'm doing a fast right now, so mine's not exactly flawless. So just please forgive me, give me a little slack. But I'll circle back to the point here, which is that the way I see it and what I've heard from potential angels for block transfer from day one is that almost certainly, Wall Street will sue based on whatever you do. Um, or if what you do works, is then you're gonna get sued. And I've kind of come to terms with that, and I think it'll be really interesting. I think there's a lot of cool things that you can find in discovery that will help expose some of the glaring, fraudulent practices of Wall Street that are held behind closed doors and kept in secret. If it were not for some of the muckrakers of sort, what do you call, the whistleblowers like the Trim Baths and the Nanax guy, and any of the advocates in any of the GameStop movies, because really it's about more than social organization of investors. It's about who owns the rail lines of our market, who owns the track, right? And there's this argument of, should you let free competition deal with it, or should you mandate everyone use the same system? If you look, for example, I take a lot of inspiration from Samuel Insull, who probably broke every rule that would be put in the book, but he was sort of operating in the electric utilities industry before there were securities laws, and more importantly, before there was widespread electricity, because he really was the one who brought electricity to masses of people instead of just the select few, with a fairly relentless focus on the efficient operations. And the regulatory regime he built around that, which was that of a regulated monopoly, was based on the idea that a single firm, like a natural monopoly, right? Like there was an aluminum manufacturer in the 40s that created a natural monopoly on aluminum manufacturing in the United States for I think it was 4 decades. And they did it by being more efficient than everyone else. That's almost exactly, I'd say, what's happened with the DTCC. Originally, securities trading and clearing was a widespread free market thing. It was local, regionalized, and there was competition for where you routed your trades, where you cleared your trades, based off of regional availability, and then also on prices. The world got more and more connected. And as these technological standards came into place, the invention of the internet and such, the securities trading and clearing system for the United States became standardized, and there became forced rules for interoperability, as there should be, saying that you can make a trade in New York and it should settle the same as a trade in San Francisco. And traditionally, those would have been different clearing and settlement systems because it was all done regionally based on paperwork and based on local accounts and such. And there's a lot of good historic documentation on that. Is a paper from Cornell that deals specifically with this question of how the DTCC became a monopoly. And it was through market efficiencies. So the standardization forced all the clearing houses to use the same standards. And this is something that I harped on in the talk this year at SF Vegas, and I'll post it as soon as I can, is when you standardize the data structures. In that example, it was in the trust accounting and reporting scheme for securitizations. For a limited purpose, the vehicle that holds the assets in a bankruptcy remote. yada yada, securitization stuff. When you standardize it, right, it becomes commoditized over time, and that's exactly what happened in the trading settlement that let the DTCCC buy up all its competitors, and become the monopoly that it is today. Because as soon as it's standardized, it becomes a question of price, which, as this market infrastructure should be. Those increases in efficiency, that's exactly what happened in the case of aluminum. Became a commodity. One firm became the better than anybody else at producing it at the lowest possible prices. They became a monopoly, and they're eventually disrupted through natural competition. But that's not going to happen here for the central clearing counterparty regime that we have in place, because it's so enshrined in this regulation that protects the incumbents, that does not exist on the transfer agent front. And I'll return to that, but I do want to, just real quick, it's all based on electric utility, and I think that's the best analogy, the best parallel, and where I've done most of my thinking is on the electric utilities, because today that interoperability standard, just like how that became commonplace for the securities trading settlement, that was also a requirement for early long-distance electric power lines. So if you're not familiar, the way that INSOL made electricity affordable for everybody and widespread was, the old way of doing it was local DC power generating plants, where you would have a power plant in the city produce DC current, and then DC can only travel very, very short distance. So you'd have very localized producers of power, kind of like mom and pop shops, right? Think about like mom and pop shops before there were Walmarts. You would have localized producers of power, and they would sell to their neighborhood and such, right? And INSOL's innovation was that you could produce the power in bulk, transmit it over long distances with minimal loss using AC, and then convert it back to DC at the local destination, right? And that was the innovation that allowed him to centralize the power generation, and it was much, much more efficient. So the cost was like 5 times less than competitors. And with electricity, it's all commodity business, right? I mean, power is power is power. And so they built these long-distance transmission lines, served cities, built, global grids. Today we have global grids. He was kind of the one who started building a national grid for electricity. Although I guess still we have fairly fragmented 4 separate grid areas, but because of why? Why are there still fragmentations in the electric grid? It's because there's not enough population, right? There's not enough density to warrant a United States national system, just as with the old securities trading and settlement depositories, there wasn't enough density to warrant a DTCC for 50, 60 years until there became that paperwork crisis. And the paperwork crisis was when there was finally enough density that it warranted a high investment in a fixed piece of infrastructure that could serve everybody. So that's sort of the example with the electric utility space. It went from, if you look at pictures of New York, in the early days before INSOL, there were these local plants by Edison, and there were wires everywhere. I mean, the street was a mess. You couldn't see the sky. There were so many power lines from all these different companies selling power, competing with each other. Versus today, it's all very hidden away. There's only really one efficient supply. And most importantly, there's an interoperability standard in place by the government, which mandates that the utility companies have to lease their lines out to competitors at reasonable rates. They have to give competitors the infrastructure to compete with them, because it's better for society that we don't build two giant power lines right next to each other, just as it's better and more efficient that we don't build two oil pipelines right next to each other so they can compete. um and sure, I mean, there are cases where you see that working with like Visa and MasterCard in a duopoly, but gotta remember, Visa and MasterCard started out as nonprofits, and their fees only raised once they became public companies with shareholders to pay. And I have nothing wrong with that, but if we're going to build an infrastructure that everyone commonly uses in a system built on capitalism, I believe wholeheartedly that just as electricity is now an everyday necessity, and we would be, all of us would, I'd say, be in disarray if tomorrow the power went out for everyone. It's sort of this common good that everyone needs, like water is a government utility, and in a lot of other countries, housing is also a, an important necessity, and so that's a little bit further into the political spectrum, and it's a little more of a nuanced topic. But coming back to the idea of a standard that everyone can use, right? There's a standard for these interoperable electric power lines, and anyone can enter they're forced to share them, because you build the infrastructure once, and then that becomes sort of the basis that everyone uses. So that's sort of how I see block transfer, is trying to build that standard interface for the next generation of capital, because at the end of the day, and let me know what you think, but I think it's fairly clear that we need how we distribute capital today is not efficient, and that's putting it nicely. It's impossible to get bank loans for a vast majority of small businesses, and there are all these costs to maintaining bank loans that established public companies. They pay these bribes, almost, I'd say, but these ongoing economic rents to these central institutions, so that they can maintain credit facilities. And like, I've talked to so many public CFOs about this. It's unbelievable, the hoops that they jump through just to have the approval of these centralized intermediaries, or banking institutions, just to have access to capital. And I think that's really what we can replace here, is a more democratic system for distributing capital, managing investments, and really growing our global economy as we become more and more interconnected. So I'm getting kind of tired. I'm gonna reel it in here. The question at hand is, how do we organize this movement, and how to raise funds? Because the founding original story of this community came from raising money for a campaign just to help educate people about the importance of DRS, and even that clearly received extensive backlash from other communities. And I really like that we have everything set up here in Discord, because I think it's really a great platform for building this kind of open, censorship resistant mastermind of everyone working together to solve these challenges that we have. And So, uh, yeah. So the question becomes, how do we organize this? And I think it does. So this is a challenge that I've had from the start of block transfers, building this public utility infrastructure that operates without economic rents. I think ideally as a nonprofit, right? And still maintaining the incentives to build it. So in the short term, there's incentive to, like, if you think about the electric power grid, the thing is it costs a lot to make it, but then maybe not as much to maintain it. And that building gap is where I think there's a lot of innovation that can be done on making public goods more accessible. Is if you can make the building part potentially profit motivated, but then not the maintenance part, not the ongoing rent. Like, I don't think anyone would have a problem if the New York Stock Exchange received like $1 billion government grant or whatever the equivalent was back in the day to build out their infrastructure, and then after that it was all built, it was all kind of provided as a public good at cost. And if you look at the history of the DTCC, that was sort of the original vision for the DTCC, is that it would be this utility that would be operated at cost. But there was a series of decisions made in its management that over time led to it becoming a for-profit company owned, well, not a for, I mean, I don't want to say for-profit, but it is like structured, right? The problem isn't the $2 billion they made last year. The problem is the trillions of value destroyed by. See, I'm trying to say this without making it seem like a claim against them, because they had good intentions to start out. But the problem is that over time, it became owned less and less by stable banks and more by stockbrokers. And if you look at the management of the DTCC today, who do you have on the board? You've got the big, powerful banks. You've also got the entrenched securities intermediaries that deal with, for example, Apex Clearing on the board of directors, an important part of the management, and yet they are they're the manifestation of all the challenges that we have in securities lending being centralized, because you've got that perpetuates and facilitates an ongoing lack of transparency in short disclosures and a perpetual problem with short sellers and failures to deliver. I talked with an engineer at the DTCC who deals with failures to deliver, and he says he gets an Excel sheet at the end of the day. It's an Excel sheet of all the failed positions, and manually phone calls the brokers asking them nicely to cover. And of course, there are all these loopholes in place that let them perpetually hold these positions as open naked shorts. And by extension, and there's evidence, so much evidence. Look at the yellow paper that I wrote. Dole Foods goes private, and a third of the investors aren't shareholders in a court of Delaware law. Like, how can that happen? And there's not more media coverage on that. It's baffling. It is bizarre. So, yeah, I think the incentives are just so messed up, and they're messed up because, unfortunately, it's difficult, I think, to operate a public utility when you have a profit incentive aligned with it. it's hard because there's always these competing interests of returning maximum economic rents and serving users. And I get that there's this argument in business that the whole point of a business is to make as much profit as possible for the proprietors, and that's very widespreadly disseminated from some of the best leaders and the biggest companies. And I get that for most things, but for public services, I don't agree. Like, if the water company started trying to charge people as much as possible, people would die of thirst, right? It's like, that's not a good policy decision. And that's why electric utility companies can't charge free market rates. They're controlled by the government because the government that we, the people, elect have decided together to come together and grant them the power to, and honestly, the power, I wouldn't even say is the right word for it, because a lot of this was set up from day one in the electric utility industry. INSO was rioting and petitioning for government regulation of regulated monopoly from almost from day one, as soon as he realized the efficiencies of centralized power production. And look, I don't want to go against decentralization, because I believe so wholeheartedly in decentralization per the decentralized asset management, and even just by the nature of the content I put on this channel. This idea that you can democratize publishing is so powerful and really fuels democracy that without any barrier to entry. It's unbelievable. I think public goods that have drastic economies of scale, that promote natural monopolies, they should be controlled and executed through a central, single regulated monopoly. And that's where I want to make the pivotal point of this argument, because if you think about a regulated monopoly in the traditional sense, it is a local service like the water, the electricity, the housing. These are very geographically based services, right? It's all based off of, for lack of a better term, borders of a country, right? Or even a jurisdiction with states, but I mean, it's all the same, right? That is not the case with information. And so you see the democratization, this information spreads everywhere, and you really can't stop information from spreading on the internet. The exact same story plays out with Bitcoin, with the democratization of currency. You really can't shut down. There's no government that can stop it, right? But I think capital is different, and I think it's different because, like, the question here is investor protections, and I believe so wholeheartedly that there needs to be systems in place to protect investors. And traditionally, that's been done through courts. It's been done through local courts, which are given power from the people through the government that we elect through democracy. And then the courts are the representatives of the people. The problem that I almost immediately see with the long-term view of democratizing capital, it's that I'll preface it with the case of currency, because there's more you can do with currency. On the information side of things, the courts, they win. I mean, you look at the founder of Mega, for example, and you've sort of got this pretty I say you've got a really great argument for the power of democracy with the raid. I mean, just the unbelievable theatrics that went into I think it's a good Netflix documentary on it that went into the capture and the trial for Kim.com. Um, make sure I got that name right. Yeah. So that, I mean, if Nakamoto was a person and we knew who he was, almost certainly the exact same thing would have happened to him. Because the courts are sort of the legacy legal system that we use to enforce, on the capital side of thing, the investor protections. And the question becomes, well, how do you enforce investor protections? Because there are always going to be investor protections. I mean, I think, right? There's always going to be anti-fraud provisions in place, and that's what I sort of laid out. I'll put the post in the description for those who are watching it on YouTube and aren't familiar with the discussion. It's a tough discussion and an important one of if we want to have investor protections, that comes through regulation. Okay, there's no other way about it. It comes through, and historically always is, through government regulation. And the question I see is, if we have a global financial system where anyone can access the market for capital, participate in the market for capital, and invest in their future through compounding equity investments, quality purchases, who regulates that? Okay? And the answer is not trivial. It really isn't. And it warrants decentralization. Kind of an idea that comes to mind is like the IMF acting as sort of the cartel for all the banks. Even though it's an international organization, it has all this centralized decision-making power that has been granted by the governments that people elect that represent, and there's a whole treaty behind it. But and there are good international things like that, like the World Health Organization, that puts out good standards and does good work. But it's all very centralized, and it's sort of an avenue for manipulation that I think has been exploited by the big banks, the brokers, and the Rothschilds in controlling a lot of financial systems that would otherwise, I mean, it's just ridiculous to think that you can order a package on Amazon, it gets here in a couple of hours in some places, but it still takes, to settle some of these securities trades. I mean, sometimes they don't even settle, right? So I think there needs to be a new system in place. And importantly, if you want to have a regulated monopoly for the system that we all use to invest in, and then make that system a nonprofit and minimize the economic rents, maximize the value to all the stakeholders, and just make it a public good, who regulates it, right? If you have a U.S. company, sure, there are U.S. laws in place. But what about when you have a Norwegian company soliciting Zimbabwe investors? Okay. And these other countries, respectfully, don't have in a wide sense of the word, don't have the extensive background of securities legislation, case law, and experience that we have in the States. And having gone through all that legislation firsthand, really understanding the regulatory regime for investor protections, that regime does almost nothing in terms of global pseudonymous transactions. And I'll give the example of my experience with Bitcoin. I've got a video on here, first video in the personal origins playlist, about how I lost 100 grand to some scam. Basically, I was a kid and I was trying to, it was 2017 and mining was big, and I saw the prices of NVIDIA cards. They're quadruple MSRP on eBay, right? So I was trying to import them, and I used Bitcoin to pay. And it's so interesting because I've always never really been able to, because I didn't know how to make payments, international payments through a traditional banking system. And I've always had a problem with not having access to a traditional banking system. I remember when I was 13, 12 to 13, I built a very primitive video game. I've got trailers. Built a very primitive video game and put it on Steam Greenlight, and it got approved. And after that process, and I could talk for days on Steam Greenlight and Valve. I mean, they are really an inspiration behind our company management structure and this idea of, nowadays I think you pay $100 and your game's on Steam. I mean, talk about a low barrier to entry into publishing. I mean, it's unbelievable. But originally it was more decentralized and democratized approach with community involvement, which I also really really like. But it's done with a pretty good. And I know there's arguments against it, and that's why I think the regulation comes into play, because Steam is a monopoly. Valve almost certainly is a monopoly over the PC gaming industry. But they do a lot of really great things, and taking a lot of inspiration from them. But I think it does need to be regulated, and there do need to be systems in place so that it's not, at the end of the day, just Gabe and a couple of other co-founders and such extracting billions of dollars off the back of a system they've built that become, I mean, I mean, I don't know. Do you think video games are public good? I don't think so. I'm not trying to argue for the transitioning to nonprofit for every single company, because that's socialism and such, and it's not ideal. But I do think that public goods should be nonprofit, and that doesn't happen. Like my dad is municipal bonds. It doesn't happen when it's funded by bankers that always have this anticipation of returns and refinancing and this ongoing interest income on the basis of lending money. Which is why I think that it's so important we get this system, what we build, right, because investments through equity are the answer, I think, to solving a lot of the challenges we have with traditional banking, and the idea of unsustainable long-term interest growth per like money masters, for example. I think all that gets solved when you have when you go back to the roots of stock and of global or big companies is selling ownership and having that ownership distributed to investors so that they own a piece of it, and they succeed when the underlying venture succeeds, and sort of a less of a focus on. I think it's interesting. We'll see how it works out with that, but. When I made that game, right, they asked for my bank account and my routing number, and of course I didn't have one. And so I asked my parents for it, and they said no, someone could steal your money and such and such. And so I abandoned it. I couldn't go forward with it. I was a kid, didn't know how to set any of that stuff up. and that was really my first foray into banking. I've always had challenges with banking. Is this idea that there's this high bar that you have to pass just to open an account, and that's a bar that blocks billions of people from the capital market financial system that we have today, and it's horrendous. It's ridiculous, and I think it's unacceptable, because without access to that kind of infrastructure, then you can't make anything, right? You can't put your time, effort into something and hope to own it if there's no way to store a representation of its value. So that's a challenge I had early on with banking. And then in that example where I got scammed, I sent the money through Bitcoin And so there was no recourse. Whereas in the central banking system, there is recourse for fraud and scams and such, um, because it's regulated by a democracy, and a majority of people think that it's bad to have frauds and scams, and they should be banking protections and investor protections in place for things like that. Um, it's the same, and that's shown, I think, recently through some of the legislative action forcing Zelle payments to be refunded for scams, even though it was supposed to be set up as is like a Bitcoin-esque system where it was permissionless and one way, no chargebacks, etc. I think there does need to be protections in place for these kinds of things. I don't think the answer is oh, you got scammed. I don't know. It's well, I'm not saying a company shouldn't be able to fail and its investors lose money, because that's capitalism and that's efficient markets and such. But what I am saying is there needs to be a process in place, um, to so that you go into something knowing the risks, okay, um, and you can kind of understand what's going on, and there's a framework for adequate disclosures, um, which and that's kind of based off the 100 years almost of securities laws that have developed in the U.S. And I think we have a pretty efficient system for doing it. And if you want to build a global financial system, and you want to do it as a regulated monopoly, which is how I want to do it, so that you have a cap on profits, you make a certain amount of money to build everything, sure, but the long term is a non-profit focus. Well, if that's the case, then the regulatory body needs to be something that transcends global boundaries and borders. And that's where I think DAOs fit in to this conversation, because DAOs finally give us a way to regulate something without actually requiring explicit authority or government oversight, and it really lets democracy thrive, because now you can finally let a community make a decision without going through a specific explicit legal process in the legacy paperwork bureaucratic system. Um, one thing I tried to work on that never really went anywhere was doing blockchain voting for U.S. elections when COVID hit, and it was like a fun research thing at school, but sort of the red tape to implement something like that, and the amount of power and authority you would need to set that up, because people would be screaming about the poor being able to vote, and like, well, that is a democracy, right? And I think we can just think through how we set this up, and we can use these cryptographic primitives that give us the power to actually do it on a widespread distributed scale. Then we have a lot of potential. We have a lot of potential to redesign the system from the ground up the right way and build something that will last. Build a piece of infrastructure that we can use 100 years down the line. Because securities trading and settlement is not that freaking complicated, okay? You need to move numbers between accounts in a very straightforward way, and maybe you want to do some cool things like lending or money management. Like, there's not that much that needs to get built here, and that kind of brings me into this next point, which we're struggling with now as a community, is how do we raise funds? Because the origin that's well documented is, and I gotta say, I love the transparency that we have from the founding team here in where that money goes in the original purchase of ads, trying to promote the information. I've been in the online marketing space since the start of college. When I published, ever since I published my book I've been trying to get that information to more and more people, because I think if you let masses of people build real savings and retirements through quality investments, then you really open up the world to a generation of innovators that are not constrained by a necessity for immediate profit, because they have a portfolio built up that can sustain them while they build out their idea, and they can do it with a long-term vision. I mean, this is exactly what I've done with block transfer. I made 30 grand trading stocks, and over the course of years, and then I have been using that as the I mean, I've just been drawing down on that, basically sitting in a savings account for the past year, and that's been my that's what's let me build this. And also, of course, I was in college for the first 2 years of it, so that also let me just focus on really getting it right, instead of, like, for example, there were all these angels that wanted to buy safe notes in the company, or and still are. And the problem I have with safe notes is that they perpetuate, and sure, they're fine for most startups. I don't see any challenge with that. But the problem for us is we're trying to build this public utility as a long-term nonprofit incentive. And so there's really no way I see to do that with long-term equity ownership. And instead, I think it gets structured kind of like the OpenAI route, where you have a capped profit. And then after the cap profit, my structure and the way it's set up is that everything will be donated to a nonprofit. And my idea from day one has been that nonprofit, which is Procyon, or at least that's kind of the arbitrary name I've picked out of thin air, but I mean, maybe that's not it, but just for labeling purposes in my thought process, that's always been what I call it. That Procyon is a nonprofit DAO that's run by investors, and I think to a degree you got companies, issuers, things like that, funds and such, and they can collectively, democratically decide, okay, we should let this person issue shares on the platform, and they should be an approved company, or not, because I think it's a pretty, nowadays, if you want to list on the New York Stock Exchange, it's a $50,000 application and such, and there's all this paperwork you fill out, and then then you gotta become DTC eligible, and then there's this centralized control over the securities issuance and investing process, and that is a problem that needs to be fixed. And the way we fix it is by democratizing who can issue securities, who can raise funds, who can start their own companies, not because a banker believes in them, but because they find a group of people online that believe in them, and they're willing to put that money up and be part of that journey. Because society moves faster when we can leverage the resources of others in a common enterprise, and that's been the growth of companies over the past hundreds and hundreds of years. So back to the point of marketing, which is sort of the question at hand here, with the email list and the ongoing promotion and advocacy and fundraising. Like I said, I've sort of been immersed in this online marketing world for a few years, from probably the start of college to just about the end of college, and most of what I've learned has been through Russell Brunson, who bootstrapped a tiny software company into a company that makes hundreds of millions of dollars a year and is worth $1 billion, such and such, and that being ClickFunnels. And what he has done is really democratized a lot of information that was previously held up in the highest levels of online marketers and internet gurus and such, and shared through his books and courses that are available in ClickFunnels how to really, market well. And I think that's awesome, first of all, but it's a lot, it's a lot of work, and there's a lot to it. I mean, these are careers, these are jobs people do, because it's a lot of effort. And so, I mean, I'm with you on it. It costs money, and it's too much to fund internally with a very small, limited founding team. And especially if you want to have a widespread impact, then yeah, I mean, 100%, you've got to involve more people, build it out for everyone, and kind of grow it that way. And it's tough because it's this nonprofit social issue. It's not a company, right? So first time I reached out through the WhyDRS website to connect with the founding team wasn't offer of monetary support, because it's important and it needs funding. It's the issues are so huge, and the implications so bizarrely massive. And the privacy part is really important, because the question becomes, how do we want to band together? And even though certainly what we're doing is freedom of speech and it's clean and it's good, like I said, there is sort of risk of not being anonymous and suscepting yourself to the traditional lawsuit process. The thing I see is that crypto transfers themselves haven't really had a big debut in court, because they're generally anonymous. They're hard to police without extensive exchange, KYC oversight. If and when assets get converted to fiat, which is sort of the only way you can spend money today, and they're exchanged for most goods. And so I think we're at crossroads. Anonymity certainly is an approach for security. We saw how that worked for Tornado Cash when you can kind of put a face on something. And I think Wall Street will almost certainly go to any lengths to discredit our work on the basis of personal backgrounds. And so it'll sort of be an ongoing fight to say, no, this is really fraud and this is really bad and they are really stealing from our portfolios and harming us materially. And I dare them to challenge us on that, because I cannot imagine all the dirt that would come out in a legal discovery process. But a great example of someone who's done this is CoffeeZilla, who's really exposed a lot of fraud on the online industry space, and he's done a flawless job at staying pseudonymous to date, protecting him from many serious legal threats. So I do think there is value in that as a potential approach, and that's something that let me know, but it seems important to a number of community members. The crux of the question comes down to, like I said, jurisdiction and regulation. If you're building a global system, who oversees that? Right now, I don't think there's a really good answer to that question. I think there are certainly leaders and who would be sort of at the forefront of overseeing it. But really what we're dealing with is something built by the people for the people. I call block transfer built by investors for investors, because I built it and I'm an investor. And if that's the system we want to stick with, then very clearly it needs to be something that's regulated by investors through, I think a DAO is kind of the only way to do that without succumbing to the challenges of voter fraud, Sybil attacks, or, you know, improper weighting. I think there's certain ways, you know, or like delegating votes to people. Like, these are all things that are crucial to a representative, elective, democratic society. And they can be done very effectively without central coordination through distributed ledgers and blockchain. So this is obviously, I think I think clearly is kind of has a lot of implications on global governance. Really, I see the industry at it's like the very, very early stages of DAOs. And I think there's a very compelling and widespread argument that DAOs will replace a lot of governing structures. Most people look at it from the corporation point of view, but I really see it more from a regulatory point of view. This idea that DTC, for example, is a self-regulatory organization. It means they make their own rules, and those rules are subject to industry comment. And even if industry freaking hates them, they'll get put into place a lot of times. And I think a great example of this was some of the amendments they made to the FAST rules in 2006, I believe. There's all these comments on one of the best comments I've ever read. SEC FAST. The comment number is in regards to DTC's 2016 proposal for amendments, 2016-16, or sorry, 2006-16, and it's got an addendum from Trimbath arguing for decentralization and democratization in the transfer agent space and the clearing and counterparty trading, right, from Continental. It's comment letter 12 from their CEO, and I can link it below. That is democracy at play. Public notice and comment, considering all the perspectives, and the point of contention here is who makes that decision. Is it an industry, a behemoth that's owned by profit incentivized brokers, banks, and insiders? Or is it a decision made through a democratic vote, which is how DAOs make decisions? You can look at Shapeshift, for example, the proposals that come into place, how people vote on them, and the inputs, you know, there's documentation behind everything. It's all public. Everybody can participate. Everyone is a stakeholder involved in what the outcome is, and there's a very clear-cut, documented, and demonstrably fair, democratically principled process for how choices get made. And it's not to promote that over anything else as like a crypto project, but it's just like a pretty prominent example that comes to mind. But I think we're really at the early stages of this transition. And this introduction of DAOs as a real thing. Now the question comes down, so how do we start? Because I think really you can raise funds through a DAO, as has been clearly shown through the DAO, for example. And you can promote transparency through quality community setup, as has been done through the early stages of the WhyDRS movement, DRS-GME movement, for example, where, you know, everything's publicly documented. You know, we use Stellar, and there are recordings of videos for everything done by the Stellar Development Foundation and Stellar developer community that has evolved over the years, building on the blockchain. I'm staring at the Discord for DRS, but right next to that's the one for Stellar, and that's been a big motivation too, because you have free speech, you have transparency, transparency and you have public documentation that really lets a mastermind, as I said, emerge where everyone's working on that same common goal and building towards a future of an open, inclusive financial system for in that case, right? But notice here that still all relies on some kind of, at least today, there's not like an open source Discord I can think of that has all the same feature parity. It still all kind of relies on a piece of common infrastructure. And whether we like it or not, I think that the end game here is a transfer agent depository, and it's one depository. And I think that's what I'm trying to build with block transfer, and then you have the governance needs to be done. Since it's a public good, the regulation needs to come from a DAO. So you can have the investors themselves define the rules of what they think is a good or bad investor protection. And just as these rules have come into existing regulatory schemes, the rules will be built up over time through the community. You look at Ethereum, right? What is most of the recent developments? It's all EIPs. It's all community. It's all community development, and everyone's contributing their own open source code, which I want this to be open source as soon as, like, as much as, like, there's a lot to the system TAD3. There's kind of like the front end that you see, which are the transactions on the Stellar Ledger. But then below that, there's like the front end interfaces, the apps, the desktop user experience. And then below that, there's the compliance, there's the underlying logic that's used through those apps and interfaces that, for instance, dictate how long you have to wait to trade things. And that's shown on the ledger, but it's based off of logic implemented at the app level that's done by understanding existing and community regulations, right? And then now below that, you have to build out a whole structure for actually moving the assets on the legacy system and interfacing with the old way of doing things, because it's a transition that it's gradual, right? So if you want to get to the perfect world of everything being decentralized Web3, you need to go through this transition period of having interoperability between the old and the new systems, the old system being the one that you replace. And that was sort of the inspiration behind the logo, is that there's material nuance as to the regulation that you have to really navigate building out this system, as to the compatibility and transition from the old system to a new system in a way that's fair. This is why I think it's so important that we put together a structure for how we're going to have what I think will need to be a government bailout of the DTCC, on the basis that investors are going to lose a lot of money because of the monopolization of trading and settlement, which has led to the DTC being able to create all these FTDs that let more shares trade than exist. So that's the third thing, and the last thing I'll put as a reference here as important background is that monopoly paper I mentioned earlier, because I do think that the answer here in the long term is that block transfer or TAD3 or whatever we use becomes a monopoly, regulate, and it's important that, like, I think in the transition period, it is a legal entity, because there are, in the old system, there are so many rules that are based off of a transfer agent or the equivalent of that. And so if you want to have compliance during the transition, you need to have, I think, that legal transfer agent entity on file with the SEC or whatever. If you have issuers in different countries, then I think almost certainly you need to have that local transfer agent providing the transition that lets the assets get onto Stellar or whatever the global blockchain system we use ends up being. And that gets regulated through a DAO, which is a consortium of investors through Procyon, or whatever that ends up being. So yeah, we're at early stages, certainly at early stages. But we need to definitely band around these decisions now, because they have super important long-term consequences. And in the context of the next steps for WhyDRS, they really do determine where we go next as a community. How do we move forward here and spread this incredibly important message? I mean, this is the exact same challenge that I'm facing with block transfer, right? I've built over the past 3 years everything that I can build, and so much more research beforehand of trying to really get the regulation side of things. I've really done everything that I have competency to do on my own. That being the back-end infrastructure, the frameworks for the compliance side of things, and I've done a lot of work setting up the company as a flat organization to promote, this principle in software that the structure of a company leads to the structure of its code and its products and what it builds. It's called Conway's Law. And I think we really need a flat organization. I've done a lot of work making sure that that's set up so that we can build this open source code in the long run. Because kind of like crypto projects where you have like an initial development that's done by a core team, and then they publish that and they do their fund ICO, for example. And then they turn it over to the community, and over time it becomes more and more community owned, community involved, open source, and distributed. I think it's really the same thing. I see a very similar path for what we're doing at block transfer in making it a global system that isn't owned or controlled by one profit-seeking entity, but really is something that is managed and owned by the community, which is the big shift in Web3. And while it might not be the traditional sense of an ICO where everyone's seeking profit, it really is more of a nonprofit public utility structure. It's, I think, important that it's parallel that in the way that the development happens, right? It's a lot of upfront development to build a Bitcoin, but then once it's built, you have a framework that stands in place for decades. And if we were just doing like a back end thing, like a Bitcoin, I don't know. There's so much work that went into it. It's very questionable as to if it was like a person or a team or an organization or something, and no one really knows. But that's kind of what we're trying to do, is build out this new system, and it takes a lot of work. And I'm facing the same challenges here. I've got, I'd say, a year and a half, 2 years. I'd say 2 years, maybe 3 of runway left, just on the bare minimums of my personal life, having like a 1-bedroom apartment and buying food and such. And we live in this capitalist economy where you need the money, and it's good. I think it allocates people efficiently. I think it promotes efficient business and work. So I'm facing the same challenge of where do we get this money? How do we spread this? How do we make this a reality? Because we've all been talking about this for years, and people have been talking about the challenges that we're dealing with for decades, but without a vehicle to fix it, and that vehicle being a transfer agent depository that really replaces the whole legacy capital markets trading and settlement system, really democratizes capital. Without a system to replace it, there's no moving forward, because you can't just yell about a problem if you don't have a solution. In my opinion, you need to have a solution, and we need to build it, and we need to replace it, right? And so that's what I'm trying to do with block transfer. And in terms of the next steps for WhyDRS, I completely agree that removing the middleman is huge. I've always been and am super against using any kind of the legacy platform for fundraising for our company until we built out our whole system. And that's when we took on our first client and started deploying it, and in a respectful way to regulators that was, I think, I've done the best I can to build a really good case on the compliance side of things. And so so I always wanted to use our own system, and that's what we finally built is TAD 3 in this new system. So now so I'm at a very similar point, I think, as to where we are with the community and needing to raise money, because I really just need to hire people to build some of these systems and structures out. I've got like 100 things up at all times. It feels like so many things to do, and I don't have the skills to do some things. I don't have the time to do something. I don't have the resources to do some things. And I'm on a similar path where I need to go into the system, go into the markets, and raise that funding. And we've had great interest from sort of the traditional crypto fields and on this topic. They maybe they don't understand completely the challenges that we're facing, but they can at least understand the simplified transfer agent efficiency pitch. And that's sort of what I've been focusing on, mostly on the videos on here, less so the whole redesign of our capital market system. So kind of here's my proposition, and you guys let me know what you think, because as Bivik says, it is tough. And the question is, do you need to incorporate? I always thought that Procyon would be a DAO LLC in Wyoming, because there's sort of this need, I think, for can you build, for instance, a broker that isn't a formal registered entity. And my viewpoint on this has sort of changed, because I think that if you can facilitate a distributed base of ownership, management, and operations through an open source community that is completely public, I think you can really build something incredible with a DAO, where the organization doesn't have formal recognition by the legacy regulatory authorities. In other words, there's not that kind of central company that everything reports under, but instead it's just a group of people working on a common enterprise together. It's really challenging to adopt that kind of DAO framework to traditional company fundraising, because normally that requires a transfer agent, and it requires compliance with securities laws, because you're raising money for a company. Even if you're giving away shares or whatever, tokens, whatever you want to call it, it's a very low bar to classify that as a security, even if they're given away for free. There was a series of companies in the 2000s, at the tech companies, right, at the .com era, that they sent their stock to investors. They gave it away for free to users, and just gave the stock away for free, which we see is sort of a common distribution pattern for most blockchains or crypto projects, right? And those are still ruled securities. Like, just because it's free doesn't mean it's not a security. There's a lot of case law for this, and I feel like, I've done so much diving into the securities laws. I think that's going to take more time for regulators to really wrap their head around. But there's something unique with the WhyDRS movement, and that's the core nonprofit intention from day one. The idea from the start that this is not done for profit, and it really is just spreading that important information. And I think that there is a big opportunity for a DAO based not on investments like the original DAO, but on donations, where the treasury is not funded by a sale of tokens that looks a whole lot like a mini IPO, where you're selling investors this venture that you're working on, and you're raising money for it, and you have sort of this effort that everyone does. But instead, you have a community that comes together, organizes under a name like WhyDRS and such, and builds out the ongoing infrastructure for a protocol, for a network. Like a Bitcoin, for example, you have, an original name, an original idea, but then that gets sort of turned over. Very early on, it's documented that Nakamoto turns over the control of the Bitcoin domain and the blog and not blog, but these Web 2 elements over to one of the very, very early community members that helped to build it on the Bitcoin talk forums, right? So I think a similar thing can happen, where you can build a decentralized community structure where we can accept, like people, their foundations, certainly, around Bitcoin. But the core incentive are just people that maintain the network and presumably have a stake in it. I think there are benefits to having a traditional incorporated nonprofit under the current regulatory regime. There are benefits, material benefits, to having a nonprofit that can be tax exempt for donations. The question and the challenge I see is, for our movement, okay, who would be a corporate sponsor? Who would really take advantage of that? Who would donate in the first place, right? Who would that donor be? Because it's not Wall Street, and it's not brokers. And the question fairly quickly comes down to investors themselves, who are the people that would sort of be most involved in the process itself. They're the ones that could really build the infrastructure and the system themselves. Because the challenge clearly comes up that sort of asking for the donations without that traditional nonprofit structure does arouse suspicion. So I'm happy to cover the incorporation costs of a nonprofit and set it up properly and such, and make it so that we can kind of, one other thing that we're really doing is setting up our own bank, because of the challenges I documented in that comment letter on moving money in the traditional system. It really needs to be opened up, and the question is, how does the community want to organize around this concept? And certainly I think that the money you can put towards marketing and development and research and publications is really important. But I also see a really in addition, right? Like, the long-term vision I have for block transfer and the regulation management by Procyon is really the same, I think, as the intentions, the goals, the motivations of the WhyDRS community. So if you're willing, I think we could set it up as a DAO with this overarching goal of building this global capital market financial system. I think the answer is on Stellar. There's also compelling research and development that could be done on DAGs and such, but I think that there's such a strong base of development skill in Stellar that will all be effectively done through their open source and contributions, right? And because Stellar has the infrastructure in place for the actual accounting, my proposition is DRS-GME, obviously, the movement doesn't, it's from the start not associated with transfer agents. It really was an independent education grassroots movement. And, same reason that I started this company in college. So my proposition is I'm really at a turning point where in the immediate future, I'm going to need external funding to grow this. I've tried to get that through the Stellar community, through their development grants, and I haven't been able to get it so far. I've done a lot of effort, and I shared it with you guys in general with the petition that I was setting up to work on that. That grant did get denied, and that's the third one. And I think that there are conflicts in the legacy securities regulation framework with block transfer, with TAD3 being supported through ecosystem grants from Stellar, because I think there needs to be a very distinct separation between the protocol layer, which is Stellar, and the application built on top of it, which is TAD3. And so I'm trying to explore blockchain grants that can support our development, keep it open source, and allow us to succeed, because we are a startup, without direct monetary support from Stellar. Even though I've reached out to them and asked for it before unsuccessfully, I think there's a challenge because the funds that they have came from their token sale back when Ethereum launched. It was that same time frame, and there are securities laws arguments that I'm grappling with that make it look like all of these projects have an aspect of securities laws in them, and we're trying to do this as compliantly as possible, and that means convincing U.S. regulators first and foremost. And if there is grant from Stellar, the biggest problem for me is that the Stellar Decentralized Exchange, which is really the only scale distributed and long-standing decentralized exchange on an L1 blockchain today, the Stellar Decentralized Exchange has the potential by some incumbents to get classified as an alternative trading system. And the argument against that is that the Stellar network is maintained by this entire global community, this network of nodes, and there is no central party, there's no central person controlling it, and accordingly it is like a private exchange. Like if you and I met at the street corner and I gave you cold hard cash and you signed over your stock certificate and medallion stamped it to me. And I think that's a strong argument. I think that holds up in court. I think that is sort of the basis of the whole cryptography for the transfers. I think the argument looks a little bit more weak if Stellar, it's the development foundation, which is not the Stellar network, but for regulators it's the same word, and so they might think it's connected in some way as it has been. If you get a grant from them, I think there's I think they run into securities laws violations where they're operating an ATS, even though very clearly the SDF, which is a nonprofit California jurisdiction, right, it's not operating in ATS. They are just building on this global decentralized financial infrastructure that is open source and public and not controlled by any central parties. It's all based off of community feedback, community engagement. Recently, there was an upgraded Protocol 20 that introduced smart contracts to Stellar, and there was a community meeting before the launch of it, and On a public development mailing list, there was disclosed to be, by a community member, there was a bug that was disclosed in the upgrade. And the update meaning that it's a new set of software that's open source for the validators in the network to run. And the bug got disclosed a day before the meeting, and the meeting goes on, and Stellar Development Foundation, as a participant in the Stellar network, said that they were okay with it, and there was people from all scopes of the network that were validators and peers on the network there in the meeting discussing whether or not to continue with the protocol update. And I came on the voice in the conference room, which was done through Discord on the developer community platform, and voiced extensive concerns about an upgrade given the amount of work that had gone into introducing smart contracts to Stellar and using kind of persuasion and such. I was the only person that spoke up against it in that meeting, but it sparked a discussion amongst the community throughout that rippled throughout. Some people couldn't make it to the meeting, so there was ongoing discussion. And within the span of a few days, there was an official announcement that the Stellar Development Foundation would disarm their protocol nodes for update, and there was a corresponding announcement from all the big industry players that they too, the most influential ones, would disarm their nodes from the update and choose instead to fix this bug. And that was despite extensive backlash in that meeting from the head honcho developer Tom Weller at the Development Foundation, because it's not about that central person who has direct control over anything. It was about what the community thought was right. It was democracy. It was not a monopoly, it was not controlled by that central entity. It was controlled by what the community thought was the right thing to do. Not like the king, but instead it was the voice of the people that prevailed and led to a community-wide decision to take a minute, do things slow, do them steady, do them the right way from the onset, and fix the bug and deploy the protocol, which is now done great, and the smart contracts are all fully live now and do great things for the Stellar network. And they have the benefit of learning from some of the earlier smart contract providers that made some questionable choices as to the permanent storage of some data on the ledger, which is an industry first in terms of having non-perpetual storage for smart contracts, which is this niche technical thing, but it's really influential for the developer community, and that's what leads to the important decision. So, I do believe wholeheartedly in the community and capitalism and democracy. I want to do things the right way. I think the right way involves educated, informed community feedback. And if you guys want I've always seen the growth of the WhyDRS movement for the very short time period that I've known about this community, and had the fortune of being part of it with everyone here. I've always seen it as a very direct, kind of like Google and Wikipedia, right? Google gets bigger because Wikipedia gets bigger. Then Wikipedia gets bigger because more people find it on Google, more people write, more information, and now there's more Wikipedia articles to be found on Google. It's a symbiotic relationship, right? There are two parts that are together. And I always saw the same thing with the WhyDRS movement. Like, the more people care about DRS, the better better able block transfer will be to build TAD3 and deploy it at scale and ongoing, operate with it, right? Using that syndicated nonprofit model where all the profits get donated. Well, not all profits get donated. I mean, the entire company gets owned by a nonprofit, and there is no option but for excess revenue to go to the nonprofit DAO, right? Um, or maybe not DAO because it's nonprofit. There are some nuances there that warrant further discussion and further consideration of securities laws. But the important crux of the vision is that eventually down the road, block transfer becomes a nonprofit or is owned by, it's the same legal entity for the regulatory transition, just to keep everything stable and keep all the boxes checked. But it's materially owned by a nonprofit. It's completely owned by a nonprofit and materially operated with the incentive of maintaining the infrastructure, maybe with modest improvements, but really there's not much you can improve on securities trading, and trying to make as much of it as possible open source and open to development from the community. That's my vision. If you agree with it, and I propose that we kind of join forces here and work not just on advocating for change, but also provide a solution that we can direct that change to. That solution clearly being the blockchain, right? And I don't think the change is going to come from legacy transfer agents. They have these. I can't tell you how much I've talked about this with industry, the incumbents, and the blockchain for them really is just it's a point of trying to make their business more efficient, make them more money, sure, but as soon as it comes to decentralizing the ownership, it's a no-go. It's not going to go anywhere but to these centralized intermediaries because they profit off of their middlemen status, and the only way to fix that is to completely change the system so it's built for investors and it's built without those middlemen, and that's exactly what TAD3 does, exactly what Stellar lets us do. So if you agree with that, I think there could be a great potential synergy here of putting together some kind of DAO. We can organize it so that we could potentially raise money from people, investors, and do it in that would be through kind of the block transfer side, where you can have cap profit investment contracts that get regulated and reported and filed as securities because they are securities, and similar to the, like I said, the OpenAI model, and then at a certain point all the equity moves to the DAO, becomes nonprofit, and there's a long-term synergy there. So obviously there are details to work out there, but the story here at the end of the day is that Block Transfer is a company I started because of the principles that we all are exploring here, for the reasons that we all understand are very important and need to get fixed. And we have a way to produce revenue off of that because transfer agents cost money. At public companies, they spend hundreds of thousands, if not more, on the transfer agent. And at smaller companies, like in the cap table management side of things, they spend hundreds of dollars a month for cap table managers, which is really just like private transfer agents, like whatever. It's all the same thing, right? Just less regulation. So it's not a solicitation of investment, right? But I do need to go out and raise money one way or another, whether it's through grants, whether it's through cap profit investment contracts, in a way that sustains the long-term nonprofit model. Because I can't do this alone. And maybe the answer is open sourcing everything today and having community developers. I didn't get the sense that there were a whole lot of developers currently in this community. Like, I get that coding is hard. All I wanted to do when I got to college was to trade stocks, and I would hire all the developers to do other stuff. But I realized fairly early on that there's just not a lot of really strong, it was early stages of technical talent in this space, so I had to learn it myself, and I documented that on the block transfer blog a little bit more about what that process was like, and I'm so glad that I did, because now I can build these systems, and built TAD3, even though it's sort of closed source now. Really want to open it up, And the only thing that's stopping me from doing that today is there's sort of not this is this question of competition, because I really think that having a unified, standardized system is so important that uh, like some of our early code's still on GitHub, and my biggest thing is like I don't want like people to build an oil pipeline right next to our oil pipeline or whatever, right? I just want to have one really strong system we can all use, and it's not for a profit incentive, because all I want to do is trade stocks. That's my whole intention with all of this has always just been to trade stocks as an independent money manager and to make money through the system, just like everybody else makes money through the system, with the securities trading, because that's all I like to do. It's my only passion, and I mean, it may work. And so I'm asking you to to join me on this movement and to kind of merge our two communities together, so that we can build something that has a means to fund what needs to the work, the detailed, extensive, and thoughtful work that needs to be done here, in the confines of the existing systems that we work in. So let me know what you think. I think let me know what you think about the synergy. Let me know how you feel about working directly together and building out this public good infrastructure for the global financial system collaboratively. Because really what's at stake here is who can access our markets, and the market for capital, and the billions of people on this planet impacted by a roadmap out of poverty through quality compounding investments. That was sort of the basis of the entire manuscript I've been working on for years, which I'm also happy to share with the community. This idea of really building this social and enlightened society where we do have that reliable financial system that is not built for the purpose of profit for a couple of gatekeepers. So thank you so much, and let me know what you think.